Okay, we are ready to get started. Welcome to you all. Welcome to the Joint City Council School Board Work Session of Monday, December 5th, 2016. We are delighted you all are here with us this evening. The actual joint work session portion, I guess, probably begins at 8 o'clock, but we are delighted to have our friends from the school board with us this evening, and our new, I guess, interim superintendent as well joining us for his first official meeting. So we'd like to welcome you, Mr. Schiller, to our meeting and to City Council. We're a pleasure to have you with us, and we look forward to working with you. So why don't we go ahead and get started. Mr. Shields, do you want to kick this off?
Thank you, Mayor Charter. Tonight is a night where we'll talk about finance, both long-term and looking ahead just directly to FY18. And we'll also look backwards. And so tonight we'll lead things off with our audit presentation. I'll ask our acting CFO, Melissa Ryman, if she could introduce our auditors. And what Council has is I think we've passed out the actual comprehensive financial report document. And tonight is an opportunity to ask questions about it and discuss it. But let me turn it over to Ms. Ryman.
Thank you, Wyatt. Good evening, Council and school board members. Tonight I present to you Billy Robinson, who is the partner on the engagement for the city's audit, and he is from the firm Brown Edwards and Company. They have been auditing us for over 6 years, I believe, and they're here to present the fiscal year 2016 audit tonight. Thank you.
Councilor.
Welcome.
Thank you. Councilors, school board members, thank you for the opportunity to be here. We sincerely appreciate the opportunity to serve the city and through our independent audit. We are a firm. We audit a number of local governments across the state of Virginia, so appreciate the opportunity to serve the city. I'm here. You guys have a very long session, it seems, tonight, so I'm going to go kind of quickly, just kind of hit some highlights, but I'm here to really answer any questions that you may have regarding the audit. The role of the independent auditor is to basically to verify the information in all material respects, that the financial statements are not misleading and accurate. And so just want to kind of give the background on what our role is. Again, going to hit some highlights, but please feel free to stop me anywhere if you want to stop and discuss anything specifically. You have in front of you the comprehensive annual financial report, which keeps getting thicker and thicker with different disclosures that are required by the Governmental Accounting Standards Board. You should have that in front of you. If you will pass over and just start kind of flipping through the first few pages. In the introductory section, what you're going to find, I'm going to point out a couple of things that I would suggest. If you go no further than this, at least read the transmittal letter and the management's discussion and analysis. This is done by city staff. We just read it to make sure that it is reasonable based on our audit of the financial statements. But that is really city management's description of the current initiatives and exciting things going on in the city, as well as some analysis regarding the fiscal year 2016 results. So just kind of want to point that out as included in the CAFR. If you flip over to the financial section, and the very first page of that financial section, page 1, you will find our independent auditor's report. In that, you will find that we issued an unmodified opinion, which is a term that is often used. It means that we believe that the financial statements are reasonably correct and accurate, and goes into further detail. It also talks about certain compliance requirements that we have to meet as part of that audit. Namely, the major compliance requirements are a single audit that with regard to federal funds, and we can talk about that just a little bit later. And then some requirements from the state for specifications for audits of cities, counties, and towns, and boards, authorities, and commissions, and both of those are referenced in that audit opinion. But just kind of want to give you a nature of what our responsibilities are. After that opinion, starting on page 4A, is the management's discussion and analysis that I highly recommend you read. Melissa and Wyatt do a really good job of explaining things for the readers of the financial statements, so I would suggest you have some time to please read that. Jumping straight into the financial statements, going to go over to page 5, Exhibit 1. The big thing I want to highlight here, the statement of net position, this is what is deemed basically the full accrual set of financial statements. The Governmental Accounting Standards Board has different ways of looking at things, so you have both fund basis financial statements and government-wide statements. The government-wide statements are intended, rather than focused more on a cash in, cash out method, which is what a lot of your fund basis financials are based on, particularly the governmental ones. This is really focused on a full accrual where all liabilities are recorded on the balance sheet, all assets are recorded on the balance sheet, including capital assets, etc. And so it's intended to be, if you were going to somewhat compare this to what a business enterprise would be, this would be the statement that you would look at. The primary thing I want to highlight here is a change that occurred last year, but still has a significant impact on the financial statements, and that is the last year, all of the pension liabilities, there was a move to a mark-to-market method for pension liabilities, and prior to that, basically pension liabilities were recorded as cash was spent out into the plan as long as you were funding the required contribution, whether both at the school board or at the city. Last year, any unfunded liabilities related to those plans came on to the locality's financial statements. And I'll point out a couple of numbers here for you. If you look at in the assets section, just up from the bottom of total assets, you'll find a net pension asset. The city's plan actually is not underfunded. It is indeed overfunded to the tune for the city is $8.3 million, and there's a school board component to that for some school board employees that are on the city's plan to the tune of about $1.4 million. A lot of that increased funding was due to the funding that the city chose, the additional contribution the city chose to make to those plans in fiscal year 2015 resulted in a net pension asset for those plans, which is a good thing, very good thing. For the school board, particularly for the state, the teacher plan, you'll find under the liability section, about 3 up from the bottom, the net pension liability. That number has grown from the prior year. That is about $40 million. And that is due to a number of factors. We've talked about it before. A lot of that is just due to the state's poor funding of that plan, particularly during recessionary times, because since the state contributes partially to VRS in times of economic shortfall, they have not fully funded that obligation. Unfortunately, that liability falls upon the school board's financial statements, but it was indeed a funding choice that was made statewide. And so if you compare your net pension liability to school systems across the state, you're going to find similar figures, because literally the way the liability is calculated is you take all the total liabilities for the pool, and then you aggregate and separate those liabilities out based on your proportion of payroll into the plan. So just kind of want to highlight those two factors there, and that results in a negative net position for the school board of a negative $30 million. Now, you'll find some localities in the state where most of our school boards right now are showing negative net positions. You'll find a few that do not. Some localities choose to issue debt through the locality and then transfer the funds completely to the school board. So the assets are all reported on the school board, but the debt is indeed reported on the locality's financial statements. That is not, and that was an accounting position that was chosen many years ago when GASB 34 was implemented, but the city did not choose that. The way the city transfers is as assets are paid off, then the net book value of the remaining assets are then transferred to the school board after they are no longer encumbered by outstanding debt. So if you compare yourself to other localities and you see a difference there, that could possibly be a reason. At the end of the day, the total reporting unit, including the city and school board, are the same. It's just some allocation of how those things are reported. If you move over to page 9, Exhibit 9, the only thing I want to highlight there was a rather substantial amount recognized this year from voluntary concessions in the Capital Projects Fund for some capital economic development projects with the city. So that was a rather large transaction that hit the financial statements, but did want to highlight that. If you move over to page 13, similar to that, the sewer fund down under non-operating revenues had availability fees paid to the tune of about $2 million. And it's my understanding that council designates a lot of those availability fees. So some of the cash you see there that is shown indeed is unrestricted. Actually, council has a policy regarding those availability fees, and they are designated as such. I think we talked about it to the tune of about $5 million for those. So just two kind of highlights of larger transactions reported in the financial statements this year. If you flip up with me over to page 35, you will find a new disclosure under the fair value disclosures. This is nothing major. There was a new disclosure requirement this year that actually made us report similar to what private companies and public companies have had to report for a long period of time, which is level 1, level 2, and level 3. And basically, what we're trying to, what the intent of this disclosure is trying to tell you how the market values are determined. Level 1 is very easily determined. They are easily determined with market prices. They trade frequently, et cetera, and there's explanations in there. Level 2 is, it's a little harder to place a value on, but it's not exactly traded on the open market, but there is a way of establishing a value. And your level 3, which is more the property fund, and this is primarily in your pension. These investments are primarily in your pension plans. But again, nothing unusual here, nothing different from prior years other than the disclosure is a little different and a little more detailed. If you go over with me, and we're going to pass through a pile of pension disclosures, go over with me to page 86. You will find some new accounting standards that will be applicable in future years. The big things that are going to affect the city's financial statements are for other post-employment benefits. So this is for benefits provided to retirees other than pensions. Primarily, this is health care, the ability for a retiree to stay on the city or school's health care plan. Much like in the past, this standard was bringing the liability in over time with an intent to adjust the liability as it went up. It is actually going to follow the pension standard almost exactly, and so it will be a mark-to-market, and all those liabilities will then come on the balance sheet in 2017. So I'll show you kind of what that looks like here in just a moment. The other disclosure to highlight is the tax abatement disclosures. There's going to be a new disclosure requirement. Any individual tax abatement relationships that a locality has, if it's considered significant, which a lot of them are, would require that you actually disclose the nature and magnitude of those tax abatements inside the financial statement. So that it's not tax abatements to the whole. So if you have like elderly tax relief, that's not a disclosure item. But any type of tax abatement deals with individual businesses will be disclosed moving forward. So just something to highlight there. And then actually you'll find a bunch of things about the pension in here because of all the standards they did a few years ago. They now want to change a couple of them because they found some issues. So a couple of those are just addressing some issues in the original standards. So nothing of major significance there. But OPEB and the tax abatement could have some impact on the city. If you move with me to determine the potential liability to page 89, Exhibit 13, it's a few pages over. So this is the schedules of funding progress for the other post-employment benefits. So one thing that the city and school system has been doing for a number of years is trying to fund the other post-employment liabilities as you go, what you consider the ARC. And actually, you guys actually have some overfunding in that to the tune of an asset. To the asset that is recorded on the OPEB plan currently is $3.7 million for the city and $1.3 million for the school board. Well, when you actually record and all of that liability at one time, you're actually going to have an unfunded position. There will be some differences in the calculation, but if we were assuming that the calculations from the old standard were applicable and you would put those balances on the balance sheet, as of June 30th, 2014, the city had an unfunded actuarial accrued liability of $6.7 million, and the school board has an unfunded liability of $2.4 million. So when that standard is implemented, I would suspect that a number similar to that will be recorded as a liability on that Exhibit 1 full accrual financial statement. So just something to be aware of. On the next page over, pages 90, 91, and 92, Exhibits 14, 15, and 16. I won't talk about any of these really, but I would think it would be interesting to note eventually there will be 10 years of information reported here. There's now 3 years of information reported here. And this really is all of the changes in your pension liability and the nature of those liabilities, the changes in your pension assets. So it kind of gives you a feel based on, and as you can see, like for example, in Exhibit 14, under the Planned Fiduciary Net Position Contributions Employer, there was a large spike in 2015, and that was from your funding, the choice that you made with the funds from the sale of the water system you chose to put towards the pension plan. So again, it's just information that you may find relevant as looking over time, and those were exhibits that were in the financials last year, but something that now that we add years to it may become more informational. If you flip over with me to page 97, there is one violation of the budget provisions that's reported in the statement, the schedule of findings and question cost. This is a violation we've had in, I think last year. And this has to do, basically the Appropriations Act says that you have to adopt the budget based on a legal level of control. For you, it is departmental budget, and then anything that does not fall within a department is considered non-departmental. You had one department, Development of Services, that exceeded that budget, and per the requirements of the specifications that we have to follow, we have to report that as a budget violation. And so our recommendation would be try to make some attempts to amend budget as necessary and make sure you're not exceeding the Appropriations Act. Not a huge deal. A finding we often see, because it's a little hard with the timing of year-end adjustments to make sure you get all those captured, but something to be mindful of. And then with that on page, if you flip with me to page 141, which is almost all the way near the back, this is our schedule of findings and question cost and lays that out. We still have a significant deficiency regarding segregation of duties that is outlined there. Primarily, it has to do with cash receipts and write-off of receivables at the city due to not enough manpower to properly segregate duties, specifically within the treasurer's office. And then the school board still has some segregation of duties issues with accounts payable, payroll, and journal entries, and also seems to be a staffing situation as well. But something we are required to report as a significant deficiency as we believe it rises to that level. There's some other things that are noted in here, a couple of findings related to the testing we have to do for the state, a couple things on highway maintenance that are outlined there, but have been there. We've had issues there before, but the city seems to be addressing those issues and improving the record keeping of that. It's not a significant issue. The state is pretty particular about what they call a violation of that, and they're not real good at giving guidance to people. So, but it is something to note and something that we are required to report on. The only other issue I would point out is this year, I spoke of federal funds earlier. If you look on page 143, between the city and school board, there was $1.4 million of expenditures of federal awards. We were required, based on the testing criteria, to test 2 of those programs, and so we ended up testing the special education cluster to the tune of about $406,000. So that was the single audit grant program that we tested. We don't test all grants. We go through the requirements of selecting a program, and more often than not for you guys, unless you have some very large transportation grants, more often than not, special education is going to be the grant program that's tested because it is the largest. For a lot of localities, the lunch and breakfast program is significant, but due to the demographics here in the city, that's not a significant funding source for the school board, so we don't test that here, but do hit the special education cluster. So I went through that kind of quick and trying to recognize the schedule that you all have, but I'm happy to answer any questions you may have.
Sure, Mr. Akuma.
Thank you, sir. So back to our 40 million, I'm on the school board, so
Sure.
it's the 40 million. Is that a recognition of everything brought to date? What I mean is, are these liabilities things we have to pay over time?
That's
or you
correct.
just aggregated them for purposes of this balance sheet?
Yeah, a $40 million check is not necessary in the next 2 years.
Because that's all we have for
Right,
4 years.
right.
So.
No, it is a recognition of funding over time, and the state has, and Hunter can probably speak to this better than I, but the state has actually implemented plans to decrease that liability. So there is a funding mechanism in place where there are increasing contributions, and maybe Melissa, you could speak to that better than I could.
Hunter could probably speak to it better. But there is in the General Assembly budget adopted last year, they had intended to accelerate funding of the liability beginning in fiscal year 2018. Although there is now talk that might be deferred further.
You have some commentary, sir?
Of course, Melissa put it very accurately, clearly, and succinctly. Essentially, when the VRS board recognized the underfunding back in the 2011-2012 period, they put forth a schedule of biennial rates, I believe through 2019 or 2020. And again, they're biennial rates that the rate would stay the same for 12, 13, 14, 15, and like for what we're looking at right now is FY16 and FY17. Last year during the budget, the governor proposed and the General Assembly went along with it, accelerating the fully funding of the VRS. So whereas we would normally see the same rate next year, VRS rate next year that we have this year, right now what's officially out there is about 11.5% higher than, it's about 2 percentage points higher than what the VRS board had originally put into place in 2012. That is, the General Assembly and the executive branch are being lobbied quite hard right now to return back to the original schedule.
Thank you, Hunter.
Other questions, comments? Mr. Duncan?
Thank you for your presentation. Would you care to venture advice to us on the segregation of duties deficiency, given the size of our enterprise and the amount of money that we're handling? As I understand it, we basically could either hire more people to cure the segregation of duties problem, or another alternative would be to hire an internal auditor to watch over the people who are insufficiently segregated.
Sure. I mean, how you address the problem is a matter for governance and for both the school board and the city to address. It is a significant issue. It's why we determine it and call it a significant deficiency. It is, there are certain comments that we report in a management letter that are just some comments and suggestions that don't rise to as significant a nature. The fact that this is reported in the comprehensive annual financial report means that we deem it sufficient enough to specifically point it out to governance and specifically point it out as an area that needs to be addressed. How you go about addressing it, is a matter of choice and analysis that I as an auditor cannot undertake. What I can tell you is that, addressing the issue, people are concerned either way. You either have to have the people with the ability to segregate the duties, and have enough people with the ability to segregate duties, or and the real answer is that, so the question on the internal audit, whether or not that's something that's a good investment for the city, is in my opinion a decision for this council and the school board. But it doesn't necessarily, hiring that position does not necessarily make that weakness go away. The weakness still exists if duties are not segregated. Now, does it mitigate some of that weakness and some of that risk? Possibly. Would it mitigate it to the point that is no longer a significant deficiency? I couldn't say that, but it doesn't it doesn't address the underlying problem of the deficiency itself.
Thank you. Just one other question. In the letter of transmittal, which I know has the manager and the CFO's name on it, but the letter of transmittal, goes through the numbers on, I think, page Roman numeral 5 of new investment in the city over the last 10 or 12 years.
Sure.
It's a little over half a billion, that's with a B, dollars, which generates enough net tax revenue to be the equivalent of about 7 or 8 cents on our tax rate. Can you, based on your work in other jurisdictions, just sort of compare what Falls Church has been able to accomplish in that area to what other jurisdictions that you work with have done in that same time?
Economic growth. I think if you just look at, I'm an auditor, so I'm not a financial advisor. I'm not your financial advisor. We're just here to verify the numbers, but I don't think it would be a stretch to say that economic growth in the Northern Virginia market has been better than the state average at times, but it also has shrunk better than the state average at times. What the city is able to accomplish, obviously there's a fair amount going on. There's plenty of new buildings as we drive down the street, so I would like to call those accomplishments.
Okay, thank you.
Mm-hmm.
Mr. Z?
Thank you, Mayor. I recall several years ago that we were caught in the headlights with GASB 65 and 68. Forgive me if I don't recall those numbers, but two of those in the 60 series that compelled us to think very long and hard about how we treat our pension liability, and as a result, we put a lot of money in there.
Sure.
And so I assume you know these numbers better than I do, and tonight you present us with an additional set of numbers from 74 to 84, and you say that these may have some implications that would affect our financial reporting and other kinds of things. So can you or anyone on the CFO staff illuminate us on what some of the top things we need to pay attention to going forward with regard to these GASB's requirements?
Just hope they quit making them.
What's plan B?
Ultimately, the Governmental Accounting Standards Board, it has said that its stated objective is to provide more transparency inside the financial statements. So much like the pension liability of $40 million, or the asset that the city now has for its funding with the water sale proceeds, that liability is always, it's existed for some time period. It wasn't created overnight. It just wasn't really reported in the financial statements. The teacher pension liability has never, until this standard, the underfunding amount was never reported in any locality's financial statements. So the Governmental Accounting Standards Board is really trying to bring these types of unfunded liabilities onto the balance sheet. Now, as I sit here today and what I know of I don't want to predict what they will do. I can't think of any potential unfunded liabilities that are sitting out there after OPEB that are sitting on the financial statements, but I don't know that that necessarily answers your question. So I'll let you, if there's anything else to add to that.
No, I think that does. Thank you very much.
Any other questions or comments? If not, we will thank you for your fine work this year and look forward to seeing you again next year. Thanks so much for coming out.
Thank you.
Thank you, and welcome as well to our table here. So look forward to seeing more of you as well, Melissa. Thank you.
And Melissa actually is going to stay with us through the through all of tonight's proceedings. In fact, has a star role in them. So,
well, good. Thank you.
I will just point out that the comprehensive annual financial reports will be available on the city's website tomorrow. I will be setting it up for upload. Thank you.
Thank you.
and I think it's available. It was available on Granicus over the weekend.
Right. Correct.
Yeah.
Okay, well, thank you. So why don't we move on to the next portion of our meeting, which is the formal joint meeting with the school board. I know we've got a few folks we're going to welcome, at least one. Thank you for coming back. Appreciate all your good work. Mr. Shields, is there anything to do to set this up?
Yeah, so Tim is here, and he is going to give you all updates for your campus roadmap project notebooks.